going on out there? It's December 22nd. And I'm Frank Curzio. It's the Wall Street Unplugged podcast where I break down headlines and tell you what's really moving these markets. It's Thursday. I have some interviews for you. Today's during the holidays. Everybody's all over the place. Say putting people's feet to the fire. So instead, I'm sorry to announce this, but you're getting stuck with Daniel Creech today. Daniel, what's going on, man? I usually do this big build-up with you, but today...
It's the holidays. We can't get anybody else. That's okay.
Yeah. No, pretty much. I mean, you know what?
I can fill in. It's one of my many traits. Moment's notice.
Yeah. It's like, I could do it at this time, but, can we do it an extra hour? I'm like, you know what? Don't worry about it. I don't want to, I just feel bad. But especially during these times, like everybody's shopping, having fun and stuff like that. But yeah, I always say this, Dale, it's critical because there's a lot going on into next year where the Consumer Electronics Show is going to start up immediately once you come back, right? I'm going to be there in Vegas. You got the JP Morgan Healthcare Conference coming out where a lot of the best news within healthcare is announced, new studies and stuff like that. So a lot of market moving stuff that you're going to see. And we're also getting economic data out and a few earnings, right? So this period's like important adjustments and stuff like that. And I know people want to just relax. And, for me, that's why they listen to us, right? Basically is to give them the scoop really quick because I know how busy they are. But there is kind of a lot going on, right? I mean, you saw David Tepper on TV today, which I thought was a pretty big deal.
Yeah, David Tepper's always worth listening or reading anything he puts out for individual investors. I didn't think... I like his laid-back style. He just says whatever he wants. He speaks his mind, not saying whatever he wants in a negative way. He just comes across as very genuine, straightforward, and honest, which I appreciate. He didn't say anything groundbreaking. It wasn't an interview, in my opinion, where you grab a lot of good sound bites, but that doesn't mean it wasn't a great interview. He kept his talent, in my opinion, is he just keeps it very simple. When he tells you, hey, his famous call several years ago was everything's going to go up. Don't fight the Fed. Mm-hmm. He's essentially saying that now, leaning towards the bearish side, because what we've been saying and you've been saying much more is, listen, how do you expect the economy and everything to go up and improve, stock prices, businesses, everything improve when you have the central bank, the most powerful entity in finance, telling you they're going to make matters harder? He just, as a society, and I'm guilty of this too, Frank, when you're a billionaire, you can talk about anything. People listen. Why? Because you're rich, and we value rich over here in the U.S. You can come in here and not have a clue about anything related. You could be Ralph Lauren himself and come in here and be like, "Hey, what do you think about Tesla?" And people would go, "Oh, yeah, what's this guy think about Tesla? He's rich, so he has an idea." Yeah. But he did a great job. He just said, "Don't fight the Fed," and I liked how he just, I'm coming across a little bit bearish. No big deal, just a billionaire.
Yeah, I mean, he's a billionaire that, for me, he's my favorite in terms of if I had to name one investor that I believe in, that I would follow, who I think is brilliant, right? You'll have that one.
So your favorite hedge fund guy?
I mean, I wouldn't classify him even as hedge fund. I would say he's overall, like, he's my Warren Buffett. Like, a lot of people look up to Warren Buffett and say, Warren Buffett's, like, to me, this guy, I follow him because of his calls. I follow him because I think he's more common sense, and we all have to be analytical at times and know the numbers and things like that. But sometimes you just have to take a step back and say, okay, common sense, what's going on right now? Okay, these rates are higher. They're going to hurt people going forward. They're going to continue to hurt people. That big pile of money that you accumulated because money was free is getting smaller and smaller. It's going to continue to get smaller throughout next year, right? So, what he said in 2011 was something that changed me and really helped a lot of people listening to this podcast because navigating the markets back then in 2011, I really got it when he said it and made me get incredibly bullish because when you look at the numbers in 2010, they were horrible. We were, even in 2011, stocks were cheap back then. But again, we just coming off the credit crisis, a lot going on, and we never saw anything like what the Fed did when it came to bailing out banks and keeping interest rates zero forever and stuff like that. Like nobody was familiar with that because that never happened in the history of the markets. And he came out early 2011 and said, listen, you know what's going to go higher because the Fed has zero rates of flooding market cash. He goes, everything's going to go higher. And he was exactly right. I'm like, holy shit, don't fight the Fed. And I think from my standpoint, when you're looking at analytics and you break it down stocks individually, it didn't matter. What he was saying, numbers don't matter right now. Money is for free. Just growth's going to go through the roof. Just buy everything because money is for free right now. So your balance sheets are going to get better. You don't have to worry about debt as much. It's easy to borrow money. It's you have a little bit of also pricing power with a lot of these companies. So it was just perfect market conditions. Now, for 10 years, what happened? The Fed kept rates low, and we saw one of the biggest bull markets in a generation. Now he went on and said the opposite. And I thought it was funny because when you're a news organization, you always want a great soundbite. And he didn't give one like, oh, the market's going to crash. You better watch out and run, right? Like nothing like that. Or, people, from someone that's been on TV a lot over my career, if I can get on TV right away if I say that the market's going to go down 40% in a week. Everybody wants to hear that. That's a great headline, right? Everyone's going to click on it. Or if, Tom Lee's the biggest bull in the world. That's why he's always on right now, because a lot of people are bearish, but, he's bullish no matter what. And he's going to make a call even on Bitcoin and say it's going to go to 250,000 this year, which, I think that was one of his calls. Regardless, they like to see that because it's a great headline. Despite that, I wouldn't tell you to watch a 30-minute interview, but it was important because he's like, look, I mean, we always say don't fight the Fed, but the Fed is telling us exactly what they're going to do. They're telling us exactly what they're going to do. Listen, he hasn't changed, Powell. Whether you hate him or not, it doesn't matter if you hate somebody or not. Right? I even say this to policy. It doesn't matter if you're a Democrat or Republican. A policy is a policy. It's how could you make money off of it. He's raising rates. He's raising rates into next year, right? And he's going to keep them there because that 2% inflation rate, we're not getting, if we're at 4%, he's still going to continue to raise rates. And when I'm looking at what he said, he's saying, listen, it's a very difficult market. It's not just the Fed that's raising rates. Everybody's raising rates right now. 7 of the major economies are all raising rates, and they don't care. And they're going to continue to raise rates, which creates much tougher conditions. This should sound familiar to you because we've said this for a year now, right? Of how it's a different market. It's different conditions. You're going to see rates rise. We haven't been in this. We've said this for a full year going through, right? And now look where we are at the markets. But going into 2023, guys, I hate to say it's going to get worse because we had a flood of cash, which is keeping a lot of these companies up, and they're okay, and they're still able to cut costs and things like that and buy back their stock. Going into 2023 is when you're really going to see the capital shrink as the Fed's shrinking its balance sheet. And that's what's going to hit so many of these companies. I don't know what the S&P 500 is going to be. It could be down 5%, down 7%, up 1%. I just know a lot of companies within there are going to see 30% declines when they're reporting earnings. I mean, you saw CarMax today is getting wrecked at down 10%. Now it's, you're looking, what was it? Close to 100 in September, and now it's 54, right? So, you're going to see these companies report horrible. Micron too, right? You thought Micron, okay, here's the bottom. They keep warning, right? That's what you're going to see going forward. It's a reason why we've been pushing money flow traders so much is this is a strategy that you can make an absolute fortune while this happens. And for our clients and subscribers to be saying, to be emailing us with the gains that they have in their portfolios, this is a dream for someone like me because this is the reason why I do this. Okay, we lowered the price of that product by 90%. It's a $5,000 product. We lowered by 90% because, and it's not for the full year, but it's for 3 months because you need to understand how to buy long-dated puts. It's one of the greatest strategies out there. I like to say like I'm some kind of genius with the newsletter. The newsletter's on fire for Money Flow Trades because he's Jenny Terranova, one of the greatest analysts. Very lucky hiring. Thought she was great, and then she's up over 30% of portfolio. She's killing it. She's got closing out winning trades like every 26 days on average. So it's like every single month. But, when I hear what Tepper's saying and I see what's going forward into 2023, this is a strategy you need to have. You know why? Because if it doesn't work, that means the rest of your portfolio is probably going to do well. I'm not saying to go all short, get out of all your positions. What I'm saying is you have your long positions in there, and even we have our long positions in our portfolios. But when you're using that 7% to 10% to protect yourself, and it's not just a hedge because some of these things could go up tremendously. If you're seeing a 20% decline after companies report earnings, which you're going to see a ton of over the next 2 to 3 quarters, this is something that can make you an absolute fortune, this strategy. It's what I'm doing with my money right now, and I keep pushing it. So if you're interested at mftoffer.com, you go on our website, again, and look for it, okay? It's a pitch because I'm pitching it because it's something that's going to help you, and I've made this mistake before because I've always been a long investor, Daniel, that, okay, what happens if the market comes down? I didn't really have to worry about that for the last 12, 13 years, right? Because the market, every time it dipped 10, 15, even sometimes 20%, a couple of times it hit at 20%, it immediately came back because of the Fed, right? We're in different conditions now. The Fed's not there to bail us out. And they're going to continue to spend money like this next package that's up for 1.7 whatever. They're going to continue. Yeah, I'm afraid to say the trillion word, but it's going to continue to be like that where inflation is going to stay stably high. And this is a way that you can make money in this market and have fun doing it because you're going to learn this strategy. So for me, Tepper is just reinforcing our thesis on the markets and saying, how could you really be long stocks here? And not saying that how could you, but it's going to be very difficult for stocks to move higher when you have the Fed and you have that constant headwind where you had the tailwind behind you. Now, what happened? Don't worry about it. Interest rates are low. Oh, temporary tariffs. Don't worry about it. 15, 20%. It'll go away. Easy money. It's not just rates, guys. They are going to come out and they are going to aggressively shrink their balance sheet, which is trillions, right? Trillions over the next couple of years are going to be taken off the balance sheet. And that's going to result in less liquidity, which it is going to be very, very hard, especially for growth stocks to go higher in this market. So I took a lot away from that, although there's no particular sound bites and like a nice headline, CNBC, but I thought it was a fantastic interview. Yeah,
exactly. I agree. I think there's value there. There's just not a clickable, light shining on it. What I like about him, again, he wears a number of different hats. I mean, he's a hedge fund guy, he's a trader, and he's also, he understands that his words carry a lot of weight for the individual investor. And I liked his honesty. And he said, listen, if you're me, I can do futures, I can buy puts, I can, we have longs. He says, of course, you always have longs, you never sell out completely. He says, but if you're just the average Joe and you can't take advantage of the same stuff that I do, not because you're not smart enough, simply because you don't have the money and the tools. He said, so just have a little bit more cash on the sideline. Mm-hmm. And that's what we've been. Hey, hedge yourself, use money flow trader, have some quality longs. But as bad as it is for business here, the honest truth is there's nothing wrong with having a little bit extra cash to help you sleep at night. Whatever that number is for you as an individual, the long game is what you want to focus on. If you blow up your portfolio, you're done. So.
Yeah, no, it is true. But I enjoyed that interview. I'm glad that they had it, and he was on for a good 30 minutes. It's
he was. That was good.
It's a good interview for you to watch, but it's again, the sound bites and stuff like that, they always want more. Like, is it going to? He's like, I'm leaning short. He's like, it just don't. The Fed's telling you exactly what they're going to do. Why fight it? So I thought that was interesting. But I want to talk about this because it is in relation to what we're going into crypto here. But Sam Bankman-Fried, right, all over, we're extradited back to the U.S. Now we're realizing that. The co-founder, Gary Wang, and Caroline Ellison, who looks like she's 6 years old. I don't know if you saw a picture of her. Have you seen a picture of her?
Yeah.
She looks like she's 10. Right?
Yeah, they all do.
She
looks very young. You're right. Yeah,
really
she looks very young.
10. Not that that matters or anything, but I'll get to that in a second. But they're rolling over, right? And that's normal. So now SBF is I don't understand with a guy worth that much and hiding that much money because he knew this was coming and you saw it, like, just to sell out of some of these things. I don't know who his advisors were, who his lawyers are, but you have to be careful when you're speaking. It's the number one thing they say, no matter what, just ask for a lawyer. If you get it, no matter what, don't say anything. It's 100% against you. If you go in and they start talking to you and you talk, don't ever talk. Even if you're innocent, just say, I want a lawyer. Because no matter what you say, that's on record and they can use that against you. And for this guy to go everywhere and make it appear like, hey, I didn't do it. Now they have the smoking gun, right? So now they had it, which is why, they finally arrested him. But now you have Wang and Ellison who are basically working with the Fed. And I think the agreement was $250,000 in bail, which they probably reached in their pocket and they handed and said, here you go, we're out, before they even finished the sentence. And they are able to basically go home for now, right? So they're rolling over, and you're going to see this really influence, the case. And for me, it's a story. It's always on there, and it's no surprise that they're rolling over. The surprise to me is when you really see the age of these people, Daniel. I mean, Sam Bankman-Fried is 30. Wang's co-founder, Gary Wang, is 29, and Ellison, when I said she looked like 6 and 10 and stuff like that, she's 28 years old. These are children. These are children running multi-billion-dollar operations. These are children.
Children, I don't know about
These
that.
These are children.
They're young people.
In a scheme of things, at $1 billion company, and when you're saying that these three are at the top, and you can say, well, if you look at, Zuckerberg, they always surrounded themselves by people who were smarter than them. I felt like these guys felt like they were the smartest people in the room. And to do what they did, the ego that's involved, and I've seen it through Wall Street, when you see anyone under 30, 35, when they start making money, they change. They're a god. They're more important than the world. And it's the way you're supposed to be because you're young, right? You're young. You don't know. You haven't got your ass kicked. A lot of these people haven't gotten their ass kicked yet. And just holy cow. When I see the ages of them and it's just... I don't know. I'm going to.
So what? Should they go light on them because they're young?
No, not at all.
Okay,
I
want to make
sure. I'm not saying they're not old enough to know what they're doing. I'm just saying that in charge of that much money going in and without the regulation behind it, I was just surprised so many people trusted them. For example, I just got a call where I get calls all the time from investments that I'm going to get into, right? If I want, and Our lawyer is great. He gives me a lot of ideas. He's in the hedge fund community, and I might pass some of those ideas on to Curzio One members and stuff. And one of the deals that he wanted me to get into was a software company that's like an add-on. I won't say too much about it, but it's really good. They're going to share a percentage of profits at the beginning, and already it's starting to make money. It's a great software that's an add-on to a much bigger program. But when I got on the phone with them, it was they're engaged, the couple. And as I'm talking to them, one's talking.
Who is the owners of these?
The owners of this company that I'm thinking of investing in.
Gotcha.
And so I'm doing a Zoom call with them, and they're both, and talking, and they're at separate places. And he's talking. She just turns around. She said, "All right, let me finish." Right away, I'm out of there. Right in 2 seconds, I'm out of there.
Come
because
on,
I'm
Frank,
just saying, there's
season of
certain things
love.
that you see. Like if I see, a bunch of young, I make sure, even when we're doing with some of our companies, I'm making sure I'm more involved. Where a company named me the president, right? So I want to see the numbers. I have to be more involved. And I feel like everybody who jumped into this company weren't involved. My point is, when I looked at that company, I saw those two just bicker a little bit. I'm playing the odds. It might be terrible, but this is my money and my subscribers getting into it. I've never seen a company work out with a husband and wife at the helm.
Oh.
Not to mention that they're engaged, right? So the fact that, not that they were bickering and 60% of marriages end up in divorce, but what's going to happen if they're both in charge of that company? That makes it really difficult. So there's little things that I see, and nobody would, the company was great, everything was great, and the people who gave it to me were like, "I'm surprised you're not investing." I said, "This is why." I said, "I'm not going to invest in it because I just feel like, I'm going to play the odds here." And I didn't like that. Again, it wasn't that they were bickering, but she was like, "Oh, well, let me finish." And so, I just don't want to deal with that issue with a company like this. My point is, these young people, I'm surprised that they went into the political circles, and I get it, but you have to be able to hire people who are much smarter than you and lean on people who are much smarter than you that understand this process. And I think instead of everyone being able to lean on these people just invested with them without even looking at what's going on underneath the hood. And now, look what happened. But,
well, a lot of them didn't. I mean, like Kevin O'Leary tried to play that card. You're not writing a check to them. You're just saying, "Yeah, I'll take money from you in an investment form and all that kind of stuff." I'm not taking away from a lot of the people that did lose money. I'm just simply saying, to your point, a lot of those people that claim to do due diligence don't have any
O'Leary
reason.
Doesn't make sense for him to do.
They don't have.
It doesn't make sense.
Frank, if you're going to bring me on to Curzio Research,
you're right.
Pay me.
Yeah.
What? Okay. Hey, why do I care what you do?
Absolutely.
And you just wired me.
Separate.
You just wired me a couple $1 million to pay my taxes, and then now I have this account that shows me these tokens. Okay, we're good. Yeah, Frank does what he does.
Yeah.
Anyway, let's have some fun here. So they roll Ellison.
Yes.
Is that right? Ellison and Wang.
Yep.
So do they go to jail? And over under of 7 years, Frank. What do they get? Because they got to do a limit. In my opinion, well,
they
you
let
give me yours.
Sam the Bull out after he killed 30 people. And
That's different, Frank. We have respect for mafia people. These guys are fraudsters.
Yeah. I'm just saying the deals that they sign. It depends how much the FBI has and the SEC has on them. If they really need a couple of dots that could be connected that they can't connect, then they're going to give them even more. And they're going to know that, these kids, believe it or not. They're going to know.
Okay, I'll take under 7 years for the two that turned, and Sam better get 50 plus. What do you think about those odds?
I think it's going to be more than 7. I mean, they might get out before 7, but I think the headline has to be bigger than that. I think it's going to be 20 years and on good behavior, get out in 4. That's how it is. Who doesn't behave good when you're in a jail cell and you only get out what are you going to do? Especially these kids. What are they going to do? They're going to fight with someone in jail? They're going to be probably going to, again, they're not going to maximum security and craziness. They're going to go there where they're going to have TVs and stuff like that, and it's nice, and they barely have a fence around where they are. Trust me, I've had a lot of friends growing up in Queens, and there's a big difference between federal prison and regular prison.
I thought you were going to say, trust me, I did 10 years.
No. But there's a huge difference with the maximum security where, visiting friends there compared to, going to federal, and there's seriously not even barbed wire on the fence because, no one's really going to run because it's like a country club there. But
she's by far the smartest of them out of the trio that I can see, because it's reported when she was in New York City a couple of weeks ago that she lawyered up with a Clinton super lawyer, as they call him, Jamie Gorelick of Wilmer Harrell. And check this out, Frank. Let's see. Was the former number 2 ranker member in the Clinton Justice Department, and recent interview she referred the lawyer to current AG Merrick Garland as her wingman. So there's no coincidences and a lot of ties in Washington. This will be fun to watch out. Fun meaning hopefully justice is served to these fraudsters. The wild thing, Frank, and the frustrating thing, like I often talk about in investing, is that you have to wait. Mm-hmm. Okay, so Sam got back to the U.S. Yesterday, I believe, sometime. Mm-hmm. The trial is not going to be until 2024, the end of 2023.
Maybe, yeah.
I mean, it's going to take forever, which is very disappointment. But at least they're in custody. You got to take small wins.
Together too. There's still a lot of stuff they got to go through that's hidden, that they don't know about. That's the thing. It's when you're coming in, you're just looking at papers and things like that. And obviously, since a lot of the houses and everything and the assets, they weren't accounted for. Yeah. I mean, you need people inside to connect the dots. So the more you can connect those dots, and they're going to know, and the lawyers for Wang & Ellison are going to know that. And if they're like, listen, you know, this is the smoking gun that you wanted. I'm going to hand it to you on a platter if you give us this, this, and this. And you know, again, that's how they're leveraging it, and that's fine. But to more important, the reason why I bring this up, because it's just like, you know, the news story that people like talking about. I really think that this is a great thing for crypto, because you need this wipeout. You need people to understand how dangerous this market is. You need to get rid of all the shit, which we've been adamant about for 4 years, covering this industry, having our newsletters, saying everything that I'm reading. I can't find anything on so many of these things. They don't provide updates. You know, so many shit tokens. I say, again, 99% of the industry. That's just not a number that I'm pulling. I'm just saying that everything that I've researched, and I'll see these technologies, and I'll look at a token structure. I'm like, you don't benefit at all. Like people like Uniswap is a great service. The token is not linked to anything. It should be worthless. The token should be absolutely worthless. It's not linked to anything. You know, and again, you don't get equity stakes in this, and it's very, very difficult to understand this market, but you need regulation, because the innovation is coming from here. And even the NFTs and the Trump NFTs, Trump's down to NFTs. Again, if you have a big name, that's a good way to sell NFTs. And again, he sold them. What was it? How many? I don't know, something.
Do you have this website up?
44,000.
Yeah, they were talking about how they sold out. They were selling for $95 a pop.
Yes.
And they sold out. I don't know how many there were. They did say it was limited.
44,000.
Okay.
41,000. So now the prices went up a little bit. Now they're coming down a couple of days. I mean, you know, when you see NFTs, this isn't what I think of NFTs. NFTs are access to service. It's access to show ownership in your property and everything that you do through the blockchain. It's amazing. You know, once it's on a blockchain, it's fact. That's it. You can't change it. It's yours. And that's going to be the future of the digital community. Okay, whether you like it or not, or whether you believe in it or not, start learning about it. I'm learning about it where the first NFTs that I bought.
Are you buying Trump NFTs, Frank?
No, I'm not buying Trump NFTs. But there are NFTs out there that are fantastic. And you know, again, there's an industry, same thing, where you want to have someone to guide you through it. Not saying that we're not going to fuck up every now and then. That's why I want to start a newsletter around this. But the one true NFT that I've gotten into is called Killer Bears. And I remember posting about it because the community is so big. And they're like, Frank Curzio's on board and this and that. I think I bought... I forgot how much, maybe $10,000, $15,000.
Is it killer or killa?
Killer Bears, killer. Okay. And these things went up tremendously in value. And because these guys have a whole story to tell. So it's like a Marvel franchise where you have all these things. Now they're going to create a new show. Seth Green's behind it, who's on a lot of the stuff with Comedy Show and things like that and animation. And then, you know, even going further, like building this show and building it and having certain chapters and telling a story and just you see this community growing and growing and growing. It's like being able to buy the Marvel characters before all the movies came out. Which is pretty exciting, you know, and the guy understands this because I talked to the owner. This is what he's thinking. He's not like, oh, well, I want to sell this and that's it. But, you know, something like that makes a lot of sense. Having access to NFTs through ticket selling, where, you know, again, you're a billionaire owner and I don't want to make billionaires more money. And I explain this. I'll explain it one more time. But, you know, once they sell those tickets, they go to Ticketmaster, who has basically the monopoly who sells it to everybody. And we saw that with Taylor Swift and how much the prices went up. But now those tickets get sold, resold for thousands and thousands of dollars, depending on the venue, what's going on, and the event. But now you can put an NFT on that. So every time that ticket is sold, say you don't make the $100 off of all the tickets, you make the $100 immediately. But then every time that ticket is sold and you click that barcode, it's an NFT. So it automatically goes to the blockchain and you're going to get 10% of every price that it's sold after that. That makes a lot of sense to me. That's a brilliant example. I hate saying that because I know that there's owners that are doing this right now in the NBA and the NFL, and I don't want to make them more money. But you could see the power of NFTs using that example of what it means. Any access to service and, again, and ownership of everything on the internet. But, yeah, seeing Trump get into NFTs, I guess, listen, it's going to bring more attention to it. I don't know. It's a bunch of pictures with Trump and whatever, so they're probably funny, entertaining. But this is the future of the market. This is going to get much, 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 much bigger going forward. Billionaires are all investing in this technology. They have been investing in this technology and these platforms, and, you know, being part of this and staking and making money through that and seeing the whole process, there's a lot of money to be made in this if you're in the right projects in the right areas. And, we have some very, 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 very good contacts in this industry because we've been attending a lot of crypto conferences over the past 3 years. And it's opened up the door to a lot of real people, real projects coming to us and saying, hey, this is what we're looking to do, and this is cool, and no bullshit, right? So this is a big deal, but the Trump thing is also kind of funny. But,
yeah. Speaking of communities and things, just Bitcoin in general and how we've talked about the bigger picture, and all that. The Sam Bankman-Fried news is great. I agree with you on the wipeout and things. From a community standpoint, Frank, I thought this was an interesting stat. 17% of Bitcoin's total circulating supply is now held by retail investors. Now, this is according to Glassnode, which is a data blockchain analytics firm. And the way they define retail investor, Frank, is a holder that has less than 10 Bitcoin, which would be valued currently, give or take, at 170,000. Mm-hmm. So they're saying if you own less than 10, you're quote unquote retail. Mm-hmm. What they use in terms of, for any new listeners or not entertained by crypto people, when you hear the term whale, that means that you hold a ton. You're a whale, you're a big player, you're a large holder, you're wealthy. Now, the 17% has gone up in the last couple of years. The figure stood at less than 12%. Again, this is for retail investors holding Bitcoin under 10 in early 2020. So in just 2 years, you've gone from 12 to 17%. We're not politicians. That's not a matter of 5. Mm-hmm. Okay. That's a good significant rise for retail investors. Why do I think this is important? Because you've talked about the need for institution to get in and really help the bull market. I totally agree with that. What I like to see is the retail get more of a portion of this before that money flows in, because then everybody benefits, not just the top. Yeah. That's what's important about that. And one last thing here, in my opinion, on why I think the individual will continue to go to Bitcoin is when you have markets evaporate or bear markets or market crashes, you do lose some wealth. Okay, some wealth does evaporate. If this was worth 10 billion and now it's worth 1 billion, that's a lot of money gone. However, the remaining money transfers. It doesn't just go into thin air, Frank. My point to all this is that you have this huge wipeout and a lot of altcoins and different coins that, to your point, aren't worth anything. What if the vast majority of those people, you're going to have some people sell everything and write off crypto and they think they got screwed and it's somebody else's fault. That's their problem. They need to deal with it. What if a lot of the money just throws in the towel and goes into Bitcoin and Ethereum? Hey, why play in this crazy lottery when you can't find information? You don't know what's exactly behind it. You don't have a lot of documents to go through and try to trust other than just what they're telling you. Why not just have a lot of that money flow into Bitcoin and Ethereum? Not to mention all your institution money coming. I think this is fantastic to see the individual retailers grow their holdings in Bitcoin.
I could tell you, one is that institutions are going to come into Bitcoin in droves. In 2023, 2024, you're going to see it's going to be open to 401ks, through Fidelity, BlackRock. It's going to be huge. And I can also tell you, speaking to the biggest bulls in Bitcoin, they hate altcoins. They're Bitcoin only. And a lot of them crap on Ethereum. Ethereum is the platform for NFTs. It's going to stay that way. It doesn't matter about the gas fees. That's the way it is. It makes it easier. It's Ethereum. It's not Polygon. It's Ethereum. They have all these extensions, Solana, whatever. But when I look at Bitcoin and the amount of people and holders too, right? I mean, you're seeing more and more people hold it, and they're saying, well, Bitcoin, more and more Bitcoin's coming offline. It is because after FTX, you're like, holy shit, I thought everything was okay, and now you might not be able to get your money back. So let me just put that in cold storage, which is, I won't say USB drive or what, but you're taking it offline and you own those, right? So if you own those and you're taking them offline and you have them on like, a drive that's outside of your computer where no one can touch, you're not going to sell it anytime soon, right? And that's why you're not seeing, I think, Bitcoin collapse from here. I'm not saying it can't go lower, depending on the markets. It was 18,000. Now it's like 16,600. The market's come down the past couple of weeks, but Bitcoin, Ethereum, those are going to be the leaders going forward. The tailwinds behind those two are incredible. And then you have, a nice group of altcoins, maybe 100, 150 of them, and some new ones coming in that offer tremendous opportunities. Unfortunately, there's thousands and thousands of these things and that are worthless and garbage.
Right.
And even going through it and seeing people and learning about new companies in this industry and some of the token structures, they're like, this is what we're going to do. I'm like, we're going to give away a percentage of profits. I'm like, you're not generating profits for probably 15 years. So that no one gives a shit, right? So how about, 2% of all sales goes into automatically buying the token. When you buy it, you burn it, meaning that, you get rid of it. Again, it's kind of like a buyback and you're taking the shares, which are the tokens, off the market. But now you're creating constant buying. That's why Binance has stayed up so well, because Binance has so many uses. They constantly burn their token from the revenues that are generated. That's a great utility. You could use it for so many different things, lower your trading fees. The coin is valuable, right? It's like a Dave & Buster's card that you just put $100 on. It's valuable in Dave & Buster's, right? But if Dave & Buster's closed, that card, even though you got $1,000 on to play video games, is worthless. So it's all about the system behind that token. And if you can't use that token as a utility feature, then it's worthless. And that's what I'm saying. 90% of the industry is worthless because that token has no structure, no anything, and can't use it for anything. Meaning that people are just going to sell it, and there's no demand and no buying for it. But with the FTX, just want to be clear here. This isn't a crypto problem. If you're like, crypto, this is what I tell you. This is a fraud problem. This is fraud. Okay, even if we have regulation in the U.S., nobody would have caught this because this is an overseas place. This is where everything took place. Not Binance has a U.S. division, not FTX in their U.S. division. This happened outside of the U.S. So even with our regulation, it wouldn't have worked. But it has brought down the price in so many different cryptos. I think this is a fantastic opportunity for people who have a long-term view. And I'm not talking about having a 10-year view. I'm talking about having a 12 to 24-month view. I think you're really going to see a lot of money going to Bitcoin. It makes sense as an alternative. People want that alternative asset class, and that's why you're seeing all these funds. I mean, if their clients don't want it, they won't do it. If their clients want it, that's why JP Morgan and Jamie Dimon did an about face. This is bullshit. The industry is terrible. You have to see how much they integrate into the blockchain and crypto now, because their clients want it. So either give it to them or you're going to lose that business to somebody else. And that's why more and more of the biggest funds in the world and management institutions who are managing so much trillions of dollars are going to get into this. And that's a lot of tailwinds going into 2023, 2024 for this. And I just think with FTX, you're going to see much more due diligence on these things, which you need, because you're going to find out which projects are real. Because again, this is the industry that you're seeing the most innovation come out of. They have a massive metaverse, massive crypto that's going to take place at the CES, arranging all kinds of meetings and things like that. And that's going to be pretty much the first week. I think going down there the 3rd to the 7th, 8th. So lots of meetings set up, but this wasn't a big part of the CES, Daniel, in the past, and now it is. And it's going to get bigger and bigger and bigger. So it is interesting. But I do think this is great news. So the FTX story.
Yeah, absolutely. Well, I love the fact that he's here in jail and awaiting trial.
Yeah, it is pretty cool. All right, guys. So look, questions, comments, feel free to email frankcurzioresearch.com. If you want to take advantage of that money flow trade offer, we're not going to keep that open forever, I promise you, because that's a huge discount. I don't think any of our subscribers who subscribe for 2 years at a much higher price, we haven't gotten any blowback because they've made a lot of money over the past year and a half on this product. But MFToffer.com if you want it. If not, don't worry about it. But please learn how to protect yourself. It's not just protecting yourself and hedging yourself. It's a way to make an absolute killing. Or for these companies that even you see today, the CarMaxes, right? Well, I want to invest long term because used car prices are through the roof. It's a great that strategy was 9 months. That worked for 9 months. And now everyone's out of these things tremendously. So that's what you're going to see, where things are going to work for 9 months. They're not going to work forever. You're going to be like, wow, this pocket is great. Fertilizer is great. This is great. Yeah. And then travel is great, but you're going to see it reverse course so quickly because of what's happening, what the Fed's doing next year, which is going to open the door to a lot of these companies reporting expectations are going to get high going into the quarter. They're going to miss, and you're going to see 10, 15, 20% declines. It's a layup. It's a way to make a lot of money. And again, if you're wrong, what's the risk? Chances are the rest of your portfolio is probably going to do pretty well in a bull market, if it does happen to be a bull market next year, which I really don't see based on the numbers. So that's it for me. Daniel, email address. I know you like getting emails these days.
I do. I've been getting a handful, too. I appreciate that. Daniel at Curzioresearch.com. Everybody's being too nice, though. Get out of the Christmas spirit. Where's all the Grinches at?
Yeah, you'll see. When the Grinches come, they come. Yeah. It's kind of funny. It's like, what? Yeah. Careful what you wish for. So, all right, guys, listen, happy holidays. Enjoy you and your family. Thank you so much for all the support. If you are subscribed to any of the products, you'll hear me from Frankie speaking tomorrow. Otherwise, make sure you watch the Eagles-Dallas game. Enjoy the holidays. Let's go Eagles. I don't know if Hurts is going to play or not, but Minshew Mania is there. And I'm looking forward to spending time with my family for the holidays. So again, have a wonderful holiday, and I'll see you guys next year. Take care.